everyone, welcome to Finance Wisdom. In this video, we're going to talk about what is insurance and how does it work. If you are new to this channel, do like and subscribe to the channel. Insurance may not be the most exciting topic to discuss, but it is really required. What is insurance? Anyway, insurance is a means of reducing your exposure to risk. Purchasing insurance is a way to safeguard yourself against the possibility of suffering a financial setback. If something bad happens to you, your insurance company will pay you or someone else you choose. It's the annoyance that we all have to pay to ensure that we don't wind ourselves in tremendous debt if our home burns down, our vehicle crashes, or anything horrible occurs. Insurance gives us peace of mind by ensuring that if anything awful happens, someone else will cover the expenses of repairing it. Though this may seem puzzling to the experienced eye, if you pay $300 a month for home insurance and your house burns down after just 6 months, the insurance company will likely purchase you a new house for hundreds of thousands of dollars. On the other hand, you would have given them a total of only $1,800. Why on earth would they act in such a reckless manner? That is the power that insurance has. And if you are interested in learning more about how it works, then stay tuned because that is precisely what we are going to talk about in the next section. In general, insurance works on the principle that a firm, the insurer, guarantees a specific risk that may or may not materialize in another person. The insured pays the insurer in return to protection against that risk. When a group of individuals do the same thing to mitigate a risk, the likelihood of that risk occurring is spread out throughout the group and is relatively constant. Insurance firms earn money by calculating how much money they need to bring into profit on a certain risk with a specific likelihood. Following this, the calculation has an effect on the monthly premium that each individual who is insured must pay. In most cases, it's just a matter of doing the math. But insurance companies use quite intricate models to make sure they're covering all of the bases. How do insurance companies work? Not all insurance companies provide the same coverage. The majority of insurance businesses will specialize in a certain kind of insurance. This is due to the fact that each corporation must design a sophisticated model in order to produce money and assure a profit. If you assume that 1 in 100 houses burn down each year but it turned out to be 5 in 100, you'd quickly lose money if you insured those homes. You'd probably overcharge for everyone's insurance and then be responsible for those 4 more residences. There are many insurance firms ranging from car to health to life to homeowners, and the majority of people have these basic insurance plans, some of which are legally mandated, such as vehicle insurance. However, you may be asking why you wouldn't simply save your money each month and deposit it in a bank account. That way, even if nothing goes wrong, you'll have a lot more money. While this is true, you are the one who is exposed to the danger. If you set aside $200 every month for a year to save on house insurance, you'll wind up with an additional $2,400 at the end. However, if your home burns down next year, you'll be out of pocket for the several $100,000 it will cost to repair it. If you think that's a risk you're willing to accept, it probably isn't. As a result, purchasing insurance is usually a wise idea. It transfers all of your risk, concern, and financial load to a much bigger corporation that can afford it. When you think of insurance as a way to pay a firm to take on your risk, you can begin to see how insurance might theoretically be provided on almost anything. Are you afraid that when toasting a cinnamon raisin basil, your toaster may overheat one of the raisins, causing it to explode into spontaneous plasma and obliterate your whole cupboard full of Lucky Charms and baked beans? Although it is very particular, someone could probably insure you for it. Similarly, if you're really gorgeous and are concerned that if you fall just once, you'll smash your head, lose your attractiveness, and become miserable since no one will like you anymore, someone could definitely cover you for that as well. This is also not too far from the truth. Since their public persona is a source of revenue, celebrities often get different parts of their body insured. However, there are still a few elements of the jigsaw that need to be discussed, such as reinsurance and insurance claims. If you like this video, don't forget to like and subscribe to the channel. Reinsurance. Reinsurance is the term used to describe the process through which an insurance company will get coverage for their own policies. This is not a practical joke. An insurance company realizes that they are too dependent on homeowners insurance, which is particularly concerning given the impending arrival of summer. They might purchase reinsurance plans to add onto their existing insurance policies in order to safeguard themselves against suffering significant financial losses in the event that all of their houses were destroyed in a fire brought on by global warming or another cause. The reinsurance company is an essential factor to take into account. If an insurance company covers all of the vehicles in Florida and a hurricane damages all of them, the insurance company may end up owing more in claims than they have available funds to pay. In the event that they ran out of money, nobody would be ready to pay. In the event that they run out of money, nobody would be ready to pay for the destroyed vehicle that they had. In order for insurance companies to be financially secure and lucrative enough to pay out claims, reinsurance is essential and absolutely necessary. Claims. When it comes to claims, insurance firms do not always pay out. If you have automobile insurance and show them a smashed car, the insurance company will look into it to make sure you didn't crash your car on purpose to collect the claim. If they find out, it's considered fraud, and you might face prison time for falsifying insurance claims. It happens on a somewhat regular basis. People view it as a means to either obtain a large cash windfall or get out of a vehicle or housing payment that they can afford if they're in financial trouble. On the other hand, car insurance companies use top-notch investigators to make sure they don't pay out for wrong things. Therefore, as you can see, the insurance industry is a significant market in which you have the potential to make a lot of money provided you have the necessary models, assume the appropriate kinds of risks, and have professional investigators to ensure that you are not being deceived. On the other hand, if you get insurance and something terrible happens to you, it might end up saving you a significant amount of money. In almost every circumstance, insurance creates a scenario in which all parties involved come out ahead financially. It brings in a lot of money for businesses while at the same time letting consumers worry less about unpleasant things that can happen. To a large extent, it is how the insurance industry operates. Thank you for watching! I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye!